Alright guys, welcome back to trade recaps and recapping my month so far. I wanted to show you guys some statistics on the month, how the month is looking, and what I'm planning to do for the next few weeks to really press when the market is super hot. So you guys can see year to date since the year started, up about $84,000 in realized profits with a 68% win rate, a 1.8 average win to loss trade. I'm trying to get this number up a lot more. My goal is to get this to about 3 by the end of the year. Last year I finished with a 1.9, so I'd like to get this number up a little bit more and really press on holding my winners for even longer, even though the number is pretty good so far. About my winners are about double the size of my losers. I'm trying to get that number up. And then trade expectancy is about $4,000 with a 3.8 to almost a 4.0 profit factor. And you could see for the month of January so far, $84,000 in realized profits, and last week had a $50,000 week, one of my biggest weeks obviously so far of the year. And I'm going to recap the exact trades that I took, winners, losers, how I managed these trades and what I was doing, and kind of explain exactly why the trades that worked so well did and why the trades that did not work that well, and what I could have done differently to maybe avoid some of those losses. So as always, we're going to go on the charts and start talking through these trades, going through some of these setups and seeing exactly what worked and what didn't. All right, so first trade of the week was the second biggest trade of the week that was taken. This was actually a trade that I don't really take too often, but I wanted to teach this entry model for anybody that is interested. And this is one of the best entry models for people that are working maybe 9 to 5s and are really busy during the day, but have a little bit of time when the market's about to close. This is called the end of day entry model. So what do I mean by that? Well, you can see this stock right here, Caterpillar, has been uptrending on the daily chart for the last, I'd say 3-4 months, right? Ever since this big move right here. Now, every single time this stock closes at a new high, it continues to push higher into new all-time highs. The reason why is because there is no resistance on the left side of the chart, right? If I scroll all the way to the left, you see there is no resistance. This is called the end of day entry model, when a stock closes above a key level that it has not been able to close above. So you can actually see right here is the chart pattern. You have a kind of mini cup and handle with a nice base. You have resistance right here at 627. Now on Monday, you could see this stock Caterpillar closed above this level for the first time since ever, right? Ever. It was never able to close above this level. Right here, you can see we got like a small wick. Right here, wasn't able to close above. This is the first close above. And you can see every single time it's been able to do this. So if you even go back a little bit more here, you can see this space right here. You have wicks, but the daily candle does not close. Right here, you have the first daily candle that closes above. You could see we have a nice push higher about 5 or 6 days. So this isn't a truly massive swing trade that you end up getting, but this is a very nice kind of end of day trade that goes into the next day with a big potential to see a gap up, which is exactly what we saw in CAT and exactly what I wanted to play out. So on the lower time frames, if we go down to the 15-minute time frame, because you guys know that's where I like to take my entry, at the end of the day, when I saw that this stock was holding that level into the close right here into kind of the last 30 minutes, this is when I entered, had a nice little pop, and all I was risking was this low right here intraday. The reason why is because if you were going to risk low of day, this would have been too big of a loss, because the contracts that I took on this trade were next week's contracts. I usually take about 1 month out contracts to let the trade run a little bit more. But as I mentioned, this wasn't a traditional massive swing trade idea. This was more so like a gap and go idea with short dated cons. I wanted to just have the one kind of push and end up getting a nice kind of move out of that. So you could see that this was my stop loss right here. If that would have ended up being taken out the next day, that would have been my stop loss, but this ended up gapping up, made a nice run up, and I ended up taking profits into the 641 level and then the 644 level here into the highs for a 150% trade in just 1 day, which is obviously absolutely amazing. This ended up being a super nice winner. But again, this could be one of those entry models where if you really master it and you're okay with taking the overnight risk, then it can make you a crap ton of money. You could see right here is another example, and this works better on specific stocks sometimes that do this. You can see right here, it actually set up right under this spot right here. It was not able to close above. So right here, you can see a wick, but boom, this is the highest daily close ever right here. You buy it right at the close, and you can see the next day it gaps up. And not only that, this would have actually been a massive swing trade if you would have taken enough time on the contracts for a 23% move. This is why I love this entry model so much. You make so much money off of this, and I use it quite often, not every single time. Obviously, it depends on the setup. Ideally, you want the stock to be making new all-time highs, because that way on the left side of the chart, there is no resistance. It's called a blue skies breakout, but this is one of those entries that I took. Now, the next two trades that I took were very, very quick first TP and stop out. And I'll explain exactly what that means and how that works and how that kind of benefits our system and the reason why I even use this in the first place to kind of trade like this. So the reason why I move my stop up to break even after a stock hits first trim is because I'm usually trading breakouts. And if a stock comes back into range after breaking out, it is usually a failed breakout. So I'll explain this trade right here. I bought USAR in the base, expecting it to break out, push through the base, gap up, and push up to these highs. Now, it actually did exactly that on this day right here, right? So it tagged my first target. I had stop at low of day, and it ended up being about a 30% winner on the option right here. I took my first trim at the target because, of course, you never want to, skip over a target or a big level of resistance and say, oh, I think the stock's going to go higher. If it hits resistance, it's probably going to reject a little bit. Might not have to reject all the way back, but you do want to take profits at that level. Now, once I take profits, I move my stop up to break even, meaning if I bought the contract at $2 and the contract hits $2.5, now I'm moving my stop up to $2 on the contract. The reason why is because if the stock comes back down, it is more than likely going to be a failed breakout, and I don't want to go from green to red on the contracts and give back profits. There's no reason to do that. And the main goal is to be able to protect your profits, because sometimes there are going to be these razor thin trades that end up stopping you out. Most important thing is managing your risk, right? So even though sometimes this will happen, and it will happen consecutively, if the market's not ready to move higher, you will get stopped out a lot, especially stopped out at break even after the first trim. And that's totally okay. We have to be able to accept the fact that not every single trade that we're going to be taking is going to be a massive winner. We're going to manage our risk until eventually we hit a massive trade. And you actually see that later on in the week that ends up happening, right? So USAR, that was the trade. I'll go down on the lower time frame so I could show you guys the exact entry that I took. So it bounced right off the 8 EMA in the morning on this day right here. When I started seeing this bounce off the 8 EMA, I started entering when it got back through the moving averages. So this is an entry model I've been talking about a lot with my students on Twitter, and specifically like on all my social media, is just saying you want to be buying pullbacks right now because the market is a little bit choppier. And when the market is choppier like this, it is very hard to be buying stuff near the highs, because the moment a stock makes a new high, usually gets sold off exactly like it did here. But if you see a stock making a low and it comes into a big level of support, like the 8 moving average, like a big level of demand, and it undercuts the previous low like this, and then it bounces, that's actually a great entry. So that's exactly what I was looking at on this one. It did not undercut, but it bounced off the 8 EMA on the daily time frame, and then I bought it right through this spot right here. Ended up gapping up the next day for a nice move, hitting my TP. Got, a first trim, then stopped out at break even. Not sure exactly where, but right when it pulled in, obviously, and my contracts ended up going to break even, got stopped out. And obviously that saved me from a deeper loss right here. Even though this ended up coming back a little bit later on, the contracts would have chopped. There isn't really much going on here, and you can always re-enter. This is the most important thing that I want everyone to understand, right? When it comes to trading, risk management is so important, because you can't go back in time wishing that you would have exited a position for a small loss, right? How many times has it happened to you guys or me or a lot of other traders where you had a trade, it was green, and went back all the way to red, you're down 50%, and now you're praying that it even comes back to break even, right? I'm sure this has happened to many of you, because it's happened to me multiple times. That's why I never let a trade go red after being green and hitting my profit target, of course. And that's why I never let a trade go down 50%. I'm always managing my risk, because I never want to be in that situation where I'm holding and praying just for it to go back to break even, and now I'm breaking all my rules and I'm building bad habits. So that is the most important part about trading, making sure that you're following your rules. That was the trade on USAR. And then we had a very similar trade on the ticker IREN. This was another one where I was looking to buy it right off the moving average. I bought it on this day right here. But on this day, I actually bought it right over the high. So you could see it was setting up a super tight flag on the daily time frame right off the 8 EMA. And this is actually called an EMA crossback after a wedge pop. So stocks go through a kind of price action cycle where they break out, get back through the 50 EMA after a downtrend, then they pull back into the moving averages. That's going to be your EMA crossback, and then they pop again. And it actually did exactly that, right? Exactly that. But sometimes you're not going to have the best timing. Sometimes the market's not going to be ready, and sometimes you're going to get shaken out, right? So you can see right here, not every single trade is going to be perfect. Even if you've been trading for 10 years, there's always going to be things that end up happening. And that's why it's so important to have a rule set and a strategy that you have discipline with and that you're able to stick to. Now, right here, you can see we have the flag breakout. I didn't buy it on this day right here, but I actually bought it on this day when it broke through the most previous high right there. So on the 15-minute time frame, we can actually see the exact trade that was taken. So I bought IREN right here as it was breaking out. I used the low of day stop loss, and I ended up taking profits on the first pop to the $50 target. Reason why is because if you go on the left side of the chart, you can see the $50 level has been a big level of resistance right here. Now, this is not one of the biggest risk to reward trades that I've taken. This is actually technically a negative RR. So this was a trade that honestly wasn't even that great, right? And again, this will happen. Not every single trade that you're going to take is going to be amazing. And sometimes even after trading for so long, you're going to make mistakes. But if you follow your rules and you make sure that you have good risk management, you're going to be okay. And that's the most important part, right? So you want to obviously cut out on these trades that shouldn't be really taken. But if you end up taking them because you're human, most important thing is that you manage your risk. So I bought this one right here right as it was breaking out with a ton of volume. And obviously breakouts haven't been working as well recently as buying the lows. So obviously the best trade would have been at the lows or even right here when it pulled in. But I ended up trimming this one. Then I get stopped out of break even later in the day. And then guess what? The next few days, this thing ends up absolutely exploding and running, right? So even though sometimes the break even stop doesn't help you because the stock might go back up and, go higher, a lot of times it does. And for me, most of the times it helps me rather than, the stock ended up running, right? So I'd rather, again, not have to say, I wish I went back in time and take the stop loss. And go back in time and take this thing at break even when I'm down like 50% and just have a rule that lets me manage my risk that way. So whenever I take a stop at break even, I always put up my stop. Whenever I take a trim, I always put my stop up to break even, let the trade work. Now, this ended up being a nice runner on IREN. The most optimal entry here could have been at the daily close over this level, right? So you could see actually this goes back to the cat trade. This area right here has not been able to be kind of closed above. Right here we have the failed breakout, so right here would have been a good entry, or off the moving average, right off the 8 EMA right here with a ton of volume would have been good. This one's actually been a pretty tricky one to buy into. I did buy shares on this right here when it wedge popped, so I'm still in shares. The option position that I had got stopped out. I did take some profits on it though at the first trim. Just the rest of the position got stopped, and now I'm just holding shares. And that's the beauty of being able to trade both shares and options, because sometimes the shares are just going to continue to run. It's going to be much easier to manage, right? Because you don't have theta, you don't have to work around the Greeks and things like that. So this was a nice attempt on IREN. You could see the next day it ended up the breakout ended up working out perfectly. Just obviously wasn't able to catch it the next day again, and then this ended up running really nicely. So the first trade on cat was amazing, really nice profits. The next two trades were basically kind of break even-ish, right? Like I took a little bit of profits and then the rest of the position came back to break even. Still made a little bit of money on them, but nothing too crazy to move the needle. This is going to be like 70% of my trades. I don't know about you guys, but 70% of my trades literally do not move the needle. Maybe they're a little bit of like base hits, compounding a little bit, but they don't really move the needle. And then you have trades like this, RKLB. So this is a trade that I entered last week, but because of the fact that it's been running and I've kind of been taking profits into the last 2 or 3 days, I'm going to recap this trade because it's my biggest trade of the year so far. And it's probably going to be a $100,000 trade. And it hasn't even been a full month yet. And it's going to be my biggest trade probably ever if it continues to run the way that I think it will. So what was the entry on this? Well, it was very similar to exactly what I was talking about on the best entries right now. It was an undercut of the base, reclaim, and then a push higher. So the setup on this was obviously a stock that's been uptrending for the last few weeks. It broke out of a massive base. This is a stock that's been in a super strong theme. So aerospace and defense has been an incredibly strong theme. This is where like all the money has been rotating. The reason why is because of the Trump initiative, the Trump administration initiative to obviously, really build out space exploration in the United States and also be the leader in space and aerospace defense, right? So drones, rocket ships, literally building a base on the moon. And when you have a macro tailwind like this, these are the types of stocks and sectors that you want to be watching. Drones, aerospace, right? Semiconductors, chips, the ones that obviously help enable these rocket ships and these drones. And this is the most important part about swing trading and also about the market. You have so many stocks to watch. You have 15,000 stocks in the market. How do you narrow it down to the best stocks? You narrow it down to the stocks that have a theme, right? That have a catalyst, that have a reason to go up. Always search for stocks that have a reason to go up. Why is the stock going up? Well, there's an initiative for it, right? And now if you combine technicals, you can have an incredible edge over 90% of the market participants. And that's exactly what we do. So you could see ticker RKLB has been, uptrending. Most ideal buy would have been right here. I did buy this one with shares right here as well. And I've been holding that for a while, but with options, right? I bought it right here. Reason why? This was a leading stock. It had just made a new all-time high and it started to pull back. A leading stock, when it pulls back, is an absolute gift, right? Because it's going to continue to go higher. It's a leading stock for a reason. If it pulls back, it's a gift. So every time you see a stock like this setting up a flag, setting up a tight pattern, you're going to want to look to potentially get in with a good entry. So what did I see on this? Well, it built a super tight flag right off the 8 EMA. But the entry and what got me so confident to take this is this stock in the morning right here actually ended up kind of taking out the 8 EMA and the previous lows and then reclaiming it. The moment I saw this, I knew light bulb went off and I knew I'm going to get into this stock, right? So if we go on the lower time frames, you can see exactly what ends up playing out. Right in the morning, this thing ends up sweeping the lows. Why is this important? Because when a stock takes out previous day's low and the lows of the range, there is a ton of people that A, get stopped out. So longs get stopped out right here. So they get shaken out of their position. B, shorts get trapped if the stock ends up reclaiming that level, right? Because there's a lot of shorts right here that got short. And then when the stock reclaims, now they're all underwater. So they need to cover. And that ends up adding to the buy pressure the other way, right? So when you start seeing that, and then you start seeing the stock recover the level, that's going to be your entry. Boom, right here, right? So I entered right here. And my risk was these lows, right? So very small risk. And then obviously I'm targeting this high right here, right? Because we want to be, if we're buying the low, we want to target the high. So this is my first trim right here. And obviously as the stock continues to go higher, I'm looking to continue to trim into strength, but I still have a large amount of this position open. Even though this is a $50,000 trade right now, I still have a large part of this position open because there's no reason to sell. Why is there no reason to sell? Because it has not broken the 8 exponential moving average. And this is something I really want to hammer home to a lot of people that don't have a great exit strategy right now. Do not sell stocks if they're above the moving averages. Yes, you should trim. Yes, you should sell into strength. Yes, you should take some risk off the table, but do not sell the full position ever. There's no reason to sell the full position if a stock is above the moving averages. You can see the stock right here, RKLB, has been above the moving averages for literally the last 3, 4, 5 weeks, like since this big move has happened, and there has been no reason to really sell this stock. If you bought here, there was no reason to sell here. If you bought, here, there was no reason to sell here because it never broke and stayed below the moving averages. It stayed above. And if you have a really good average, like all the way down here, and you bought it right here, there's literally no reason to sell until it breaks the moving averages and starts showing weakness. I'll give you guys an example. Look at this big mover here in 2025, RGTI. It was going up. People right here sold, never broke the moving average, went up. People sold too early. Right here, once it started to break the moving average, the EMA was the time to start selling, right? And then you could see it started going lower. That is when you want to start to sell. But imagine if you would have sold here instead of waiting for it to really make its move. This is why it's very important to have the proper exit strategy. Trim into strength, yes. So I trim into the highs. I move my stop to break even. I let the rest run. I trim some more into strength when it gets a little extended from the moving averages. And then the rest of the position, I'm trailing against the 8 EMA. One good trade like this, guys, can literally make your whole year, your whole month, whatever it is. And like I said, there are going to be break-even trades. There are going to be trades where you even lose during the week. But if you can catch a good trade like this, you can make your entire month or your entire year even, depending on, if it ends up running. And the last trade that I took was another one that was very similar to this one, and I think it'll actually play out exactly the same. You can even see the chart looks almost identical. So has the first impulse, kind of goes sideways, next impulse goes sideways, and all I did was buy it after it came out of the sideways base. So right here, this stock ends up, breaking out on this day. I wasn't able to catch it on this day on Wednesday, but on Thursday, pulls back to the 8 EMA. Right when it pulls back to the 8 EMA, I'm looking to buy this thing, right? Because again, a stock that's leading is leading for a reason, and if it pulls back, it's giving you an entry opportunity. So this is the daily setup. I bought it right off the 8 EMA right here, and I'll show you guys the lower time frames. This is what I call my 30-minute pivot. So what a 30-minute pivot is when a stock pulls back and has a red candle, the next green candle that forms, you're looking for a break of the high of that 30-minute candle. So right here was the break of the high of the 30-minute candle. Right here is when I bought it. Stop loss goes to the low of the day. And then you guys can see this one ends up running. And again, I'm already up about 100% on this one just from this entry right here. And that's why I'm saying it's going to be very similar to RKLB, because if this thing breaks out, and you can look at the weekly, I mean, this is going to be a massive, massive trade. And I have about 2 months on this to let this play out. Like, this can go 100% plus. Which is why swing trading works so well, because imagine if I sold the whole position the same day, I would have made 40%. Sure, it would have been good, but it would have never gotten up to 100% when this thing thrusted higher the next day on Friday. And then it's probably going to continue to go higher the whole next week and the week after that, because it's a leading stock. And this is what leading stocks do. This is why it's so important to buy the right names. And you can see, as always, I ended up, letting the group know exactly what I was taking. Adding UMAC, the exact level that I was taking at, my stop loss, everything like that, updating them when I was trimming. And this is what I do every single time in the group. I let them know exactly what I'm taking and exactly how I'm managing the position, not so that you can copy every single trade, but that traders can learn my exact thought process. And as always, I'm guiding everybody with the market commentary. I'm letting them know when I'm getting into a trade, what stocks I'm looking at, my focus list and everything like that, so you can learn the exact process and learn all these entry models and all these kind of ways to get into these really good names and swing trades, so that you can do this exact thing yourself. So if you've enjoyed this video, if you learned something from it, please leave a thumbs up, subscribe to the channel. I appreciate the support a lot, and I'll see you guys all in the next video.